This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 3/8/21, and this is show number 220. Well, Nick, you know, we talked about it the last show. The Plunge Protection Team, otherwise known as the PPT, otherwise known as the President's Working Group on Markets. What they're working at, you can only imagine, but nothing good. And here we are, Nick. Friday turned into like a monster advance.
It really did. It was a great rally, great recovery for the markets, especially after gapping up pre-market on the back of the job report and then completely flushing, selling off, going negative, and then really right around 11:30 in the morning, that's when it usually happens. Volume gets lighter. Going into the lunch hour, the markets just started to float back up, and they really actually had a very, very good session on the upside. Hence the old saying it's not how they open, but rather how they close. Obviously, that was a positive close, and it's carrying over into today's session.
Hey, if I could just paraphrase your saying there, it's not how they open, it's how they close. How about if we say it's how they close them?
That's right. It is how they close them. So that's exactly correct, and we'll use that going.
I mean, really, let's face it. Who are we kidding here? That's not normal market behavior here. It's really a question of the powers that be not allowing the market to go down. The dollar's also been going up a little bit, maybe because of bond yields. I don't know the answer to that, but yields are heading higher. That's for sure.
Yeah, yields are heading higher. The dollar has also been acting well. It's been starting to strengthen. I told you earlier this year, I said, do not get bearish the dollar this year. As the markets come under pressure, the dollar should be stronger. Dollar's actually up a little bit today, but bond yields, I think, are doing a little bit of backing and filling right now, but they're talking, and they're going to go a lot higher as well. That's not necessarily a negative for the markets either. I think the big negative for the markets is what's going on in the repo market. And that's the lending between one bank to another overnight. And there's problems there. So we'll see if the Fed can come up with the medicine to fix that problem. But all in all, I think right now we got a short-term bounce ahead of us and then another sell-side opportunity waiting.
Hey, I want to go back to the last repo crisis we had, which was, when was it, a year ago? In the summer?
That's right.
I don't remember.
It was actually right before the sell-off with the coronavirus sell-off in February.
Yes. Now, when there's trouble in the repo market, there's trouble. There's trouble in paradise. Would you be surprised to see a big sell-off as a result of what's happening with the repo market, Nick?
No, not at all. In fact, I almost anticipate it. So I don't know exactly the timing of it, but I'd say this, that right now you're getting a bounce in these markets. Enjoy them and don't get too excited about them. But ultimately, I do think we're headed lower.
All right. And hey, the PPT, one day they're going to intervene, Nick, and nothing's going to happen. It's going to still go down. What happens then? Then they got to actually buy all the stocks directly, right?
That's probably what will have to happen. They've never done that. They're dabbling now in corporate bonds. But eventually, who knows what their next test project will be? I don't think they want to get into the buying of stocks themselves, but I guess Japan does it. They buy ETFs, so as one goes, the other will do it eventually. So again, you got to be very, very careful, tiptoe around this year, and there's opportunities on both the long and short side. That's a good thing as a trader. You don't have to be married to these things. You get in, you get out if you can catch the moves. But overall, good rally today. We'll leave it at that. We'll see where we finish. But, I do think this leads to another sell-side opportunity.
Okay, so let's go to crude oil. I know that's a market that you watch like a hawk, and we've had some really bullish action there, especially when you consider not long ago they had to pay you to take the oil. Although they weren't paying me at the gas pump for some reason. I don't know why that didn't happen since it was trading at negative numbers. I mean, and now we're in the 60s here, and, where's it going to end?
Well, I think that when you get to 68 to 70, I think there's a lot of resistance. We're going to brush up against the monthly chart, 200 period moving average at around $69.72. Crude has had an incredible run. My target on this, I told my members, was going to be 68. I like to be a little bit more on the conservative side. If it goes over a little bit, that's fine. I have not shorted it or anything like that because the pattern is still strong. So unless you get a sell side pattern, you don't really want to fight that. But overall, I think we're now getting up into some resistance zones between 68 and 70. Right now, crude oil, as we speak, is trading around 65 and a quarter.
Wow. And that's way up from the past several years. And you're seeing it at the gas pump as well. I mean, I filled up my car the other day and it was $60, Nick.
Yeah. Oh, it's a big increase now when you go to the gas pump. I mean, just think about it. We were paying under $2 a gallon in Florida, about $1.99, $1.95.
Mm-hmm.
Now we're up over $2.50. It's incredible.
Yeah, really amazing, and that's going to have an effect. But one thing I've noticed, there's so much money sloshing around, Nick. There's really a lot of money sloshing around the system, around the planet, and that explains why real estate prices are through the roof, right?
It does. And it explains why asset prices are through the roof as well. And don't forget, you have the politicians now passing another $1.9 trillion stimulus bill. They're going to be sending out $1,400 checks to everybody. So the anticipation is that all of that money is going to go into the stock market, or at least a fair amount of it, as a lot of these younger people get their checks. They're going to go right into the Reddit boards, and they're going to try to buy some stock. That's right. They're going to try to buy some stocks. And don't forget, Robinhood is probably going to be a publicly traded company soon, too. So markets like to hold up sometimes into those popular IPOs.
So you can go use your stimulus check, put it in your Robinhood account, and buy Robinhood, right?
That's right. And we'll see how that works out. But that is probably what's going to happen.
All right. So finally, precious metals getting slammed again.
Yeah, we got some down move, and we got a down move today in the precious metals. Looks like gold futures today down about $19. But Kerry, we always say, watch the intraday action, because that could be down and then it could turn around rather quickly. The one thing I see today, and I own it, full disclosure, is I own the GDX, which is the gold miners ETF. That's holding up really, really well today, just down 18 cents. And I actually love the way the gold miners are hanging in there right now. And this is something I think is overdue for a bounce now.
Yeah, that one thing I wanted to talk to you about, and we actually got a question, divergences. How do you read divergences in the stock market to actually, make money off of them?
Well, it depends if it's a price divergence between two equities. Is it an oscillator divergence where you got a new higher high and prices making a lower low? That's usually pretty bullish. Sometimes, like I use a price divergence not too long ago when I was saying, hey, the NASDAQ 100 is weaker than the NASDAQ. And obviously we saw since February 16th that the NASDAQ really take a tumble. So there are a lot of ways to use price divergences, but it really depends on if you're using an oscillator, using one equity versus another equity. What I like to do regarding gold is if the gold miners are showing strength compared to the gold price, that's usually a bullish indication for gold. So that happens at turns a lot.
Right. And so they're worth looking at and understanding the nature of them, because right. I remember, I think it was in 87, where the Dow diverged from like the NASDAQ, and we had a huge crash that year. In the lead up to that crash, we had that divergence going on.
Yeah, so we have a nice price divergence going on right now where the Dow Jones Industrial Average is the strongest of the major indexes. The Russell obviously has been the strongest index overall this year, percentage-wise, but we're starting to see the Dow now showing great leadership. Good example of that is it's up 1.4% today. The NASDAQ Composite is up 0.26%. The NASDAQ 100 today is actually negative I never like to see the Dow show leadership. When the Dow shows leadership, it's always a red flag in my book, and it's something you have to be very, very careful. Remember, people go and they buy Dow stocks just simply because they could park money there. They could collect a dividend. They're blue chip companies. They're not going anywhere. They're going to be around whether the times are good or the times are bad. When people get into the Russell or technology, they're looking for growth. They're looking for exponential growth. They're not really playing the NASDAQ and Russell stocks because they want a dividend. They want actual growth out of those companies.
Yeah, exactly. And the Dow investor is a lot different than the NASDAQ investor. And like we talked about, the companies are larger on the Dow and they have better staying power. Yes, many Dow companies have ceased to exist, but compared to the broader market as a whole, the turnover is much less there and their staying power is greater because the size and the financial resources that they bring to the market.
That's correct. And again, they're usually viewed as the top 30, right? The Dow is a price cap weighted index as well, whereas the NASDAQ and the S&P are market cap weighted indexes. So again, you could have a high price stock in the Dow and that'll move the whole index. So I'm always on guard when I see the Dow show good leadership. And right now on the daily chart, the Dow is showing some of the best leadership, if not the best overall.
Yeah. So that is the yellow light, right? When you're in NASCAR and your racetrack and the yellow light comes up, that's the caution flag, the yellow flag.
Absolutely. And we see it right now. It's been happening. And, we've had a tremendous pullback. Even in the S&P, the markets have pulled back quite a bit. Now between Friday and today, they're getting a bounce, but should lead us to another opportunity. The next leg will be the bigger leg, and all you got to do is just look at the recent low in the S&P, which is made on the 4th of March. When that low gets taken out especially on a weekly close, then be really careful.
Look out below.
That's right.
Look out below. All right, we're going to leave it at that. Make sure you go over to inthemoneystocks.com. These trades of the decade are taking place right now as we speak. You still have an opportunity to get in there, right, Nick? You do.
And there's a lot of other trades too. So, we last week I closed out some really nice option winners too. Options are always an easier way, in my opinion, to play, rounded tops. And I think that's what we're having in the overall market right now is a rounded top before you start to move lower. So, that's something else that you could do. You don't have to use a lot of capital. You make some nice percentage gains, and we've had some real good winners there as well.
All right. Exciting times. Make sure you go over to inthemoneystocks.com. While you're at it, take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Email us kl@kerrylutz.com. Nick, we will pick up tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.